Welcome to Cheques and Balances. I'm Michael Vincent. This is James Blair. And this week we're joined by Matthew Harris, the Director of Lighthouse Accounting, to talk about high LVR lending and deposits for first homes.
All right, Matt, welcome back. What do you think of the new setup?
Look, good to be here as usual, and I'm pretty excited to be in a proper studio. What's the thing called that I just had to clip together?
The take thing?
I was today years old when I did that.
Live goals have been hit.
Yeah.
So for those that don't know, Matt, firstly, what have you been doing with your life? Secondly, so Matthew Harris is the Managing Director at Lighthouse Financial Services. In addition to that, he is Mr. Taxman and also the Property King. So we like to have Matt on from time to time to talk about a whole range of different things. But today, we're talking about deposits and new builds. Because, Mike, it just gets more and more confusing around what deposit do you need, what are the rules, which banks are playing with you.
It does. So this comes off the back of the RBNZ, or the Reserve Bank of New Zealand, has tightened the amount of lending that banks can give for low deposits, or people who have deposits of less than 20%. Now, traditionally, banks could run sort of 20% of their book with low deposit lending, and now they've pulled that back to 10%. Now, that may not seem like a huge change, although it is a 50% reduction, but just keep in mind that banks still like to have some wiggle room there in case of a market correction. So although they're allowed 10%, chances are they're probably going to pull it back to maybe 8% or 7% just in case there's a correction and their book needs to withstand that. So what does this mean? Unfortunately, first home buyers in major centres, you're in trouble. This is going to really impact first home buyers or people who are more likely to purchase with low deposits. And regionally or geographically, you're going to see that in the major centres a little bit more than some of the other places. And the reason for that is people who live in major centres earn a bit more. There's a higher paycheck, so you don't usually see that servicing is the issue there, but the house prices are a little bit higher. So saving up that little bit extra for the 20% deposit becomes harder. Because also in those major centres, again, cost of living is a little bit higher as well. So that's who it's really going to impact, and that's sort of the changes in the market so far.
Yeah, and I think out and about in the traps, there was the argument that debt-to-income ratios actually hurt first home buyers, and they hurt people who are of a lower economic status than other people. So people who have access to the bank of mum and dad, for example, can get around a DTI by just borrowing from mum and dad.
Throw more cash at the problem.
Yeah.
Is that not the only way to fix problems?
Should tell my therapist that one. and that's a really good point though, right? And it's not going to impact everyone equally. And there are sort of strategies you can use to get around it. But really the big shifts in the market so far from the retail banks or the major retail banks have been BNZ and Kiwi Bank, which have pretty much shut up shop for new lending over 80%. Kiwi Bank actually pulled their pre-approvals if it wasn't tied to an existing property. So if I had a pre-approval and I was out shopping for a house from Kiwi Bank, all of a sudden I got a phone call. I bet you it wasn't a phone call. Actually, I probably got an email to say, thanks, but no thanks. We've revoked that and better luck next time.
That's so depressing. Imagine, looking on the weekends for your house thinking, I'm finally going to make it. I'm going to be on the property ladder. And then Kiwi Bank's like, nope, not going to happen.
Yeah, exactly. So the other major shift is really the BNZ as well, who have effectively, again, shut up shop for that low deposit lending. So my advice there is if you have a pre-approval from the BNZ, you need to use it. Because it's not going to be extended, it won't be rolled over, and banks can be pretty brutal with this sort of stuff, right? We, as brokers, we quite often see banks when policy changes underneath an approval, they will look for any excuse to get out of that, right? Because at the end of the day, one angry customer is better than a very angry regulator saying your book is over where it's meant to be. You're now in serious trouble.
I mean, if you think about some of the things the RBNZ has said to Westpac recently and the language they've used, I definitely support that.
Yep.
The other thing, just on the point around using the approval when you've got it, is I was just talking to a client just yesterday, and they were saying, hey, my mortgage is a different firm. saying, hey, my mortgage broker's being a little bit pushy, saying I really need to get on with it, and I'm feeling a little bit uncomfortable. And usually I would say, well, hold your horses, there's no rush, take your time.
Yeah.
But it clicked in the back of my mind going, actually, you might want to get on with it because that opportunity might not be the same in a couple of weeks or a couple of months.
Yeah, and it's a funny conversation from a broker's perspective because you try to stay as impartial as possible because remember, there's always that conflict of interest with how we get paid. We get paid when you draw a loan down. So you don't want to be seen to be like, take a loan out, take a loan out, take a loan out. But at the moment, yes, I'm like, if you have a pre-approval, go find a house and get it locked down because you're simply not going to get the same approval again. So we've had RBNZ shift, we've had a couple of banks shift. There are some strategies to get around this. And again, this isn't going to affect everyone equally. Some people have access to these strategies, some won't. First one is obviously you can go see another bank. If you have a broker, they should be able to take your application to other banks. Although at the moment, a lot of other banks are just keeping this over 80% lending for existing main bank customers. So it is getting a little bit harder to get those applications into some of the other banks. But again, that's sort of the first port of call.
On that point, Mike, so just it seems like you've kind of answered the question already, but there's no obvious bank going, hey, if you're going to have a crack at somebody, this is the best one. It's just kind of it's hard to get it done.
Yeah, it's hard across all of them. Where if someone is a main bank customer or can be proven to be a main bank customer somewhere else, that's usually a little bit easier. Some of them are getting harder than others as opposed to some are just easier. ASB have increased the requirements for over 80% lending pretty significantly. So it's actually pretty hard to qualify for their low deposit loans. Westpac a little bit easier, ANZ again a little bit easier. So those are probably the two that we're trying more than others. But again, they've shut up shop for some of their lending as well.
I think as someone who's been kicking around the property game for quite a while now, despite my youthful appearance.
Long time.
I think it's important to remember if you're watching this that banks regularly change policies.
Yep.
The way they apply debt-to-income ratios, the way they apply loan-to-value ratios, it has changed year on year for as long as I can remember. So just because you can't move right now in that space doesn't mean there won't be an opportunity later. And back to your point on a broker's position in all of this, yes, they get paid by the bank, but a good broker always has their client's best interests at heart. And there will definitely be cases at the moment where they're going, if you don't buy now, it could be a year before you can buy or longer. And the opportunity cost could be quite high.
Yeah, we've got one customer at the moment who's, they have a 91% loan pre-approval. And yeah, that conversation, I'm like, you need to find it. You need to find it before Christmas because if you don't, I don't think we're going to find one in Jan and get it settled. So yeah, we're definitely having those conversations. Some of the other strategies that people are using, again, I don't like just reliance on mum and dad, but unfortunately, that's going to be a lot more prevalent now as people will need to lean on the bank of mum and dad a little bit more, whether that's a gift, a deed of acknowledgement of debt, or something similar where their parents are providing the delta between the existing deposit they have and what they actually need to get the pre-approval.
I love it when you use the word delta.
I thought you were going to say I love it when you put gift in air quotes for those who are listening and not watching. But and it's honestly my personal view on that is that I'm not even a lot of the time now I don't even bother putting in it. I just say like you're going to have to get money off your parents. We're going to have to frame it as a gift, and we're going to have to ship that off to the bank. And I might get in trouble from a bank for saying that one day, but this is the position that people are in, and the people need to know about this so they can actually get into houses. Because I almost see this as people who are sort of pulling the ladder up behind them, right? Like we're going to make it harder for first home buyers to get into houses. We're going to pull the ladder up, and we're not going to let you in.
Yeah. It's okay though, Mike. I don't think this conversation's recorded. You should be fine.
I was going to say, can they cut that bit out?
Yeah, just beef. Yeah.
So what other strategies have we got apart from going to other banks and another bank, which is mum and dad?
Yeah. So obviously you can look for cheaper houses, although that strategy isn't great either because I don't know what that class is these days. Potentially there is the option of the joint ownership scheme that the government has rolled out. I don't particularly give this advice often because I prefer to people do it without the government's help than with the government's help. It's just more, you could argue what's the difference between my parents helping me or the government helping me? Quite a bit. And just the flexibility and a bit more freedom you probably get with your parents than the government, and the cost and the regulatory sort of things you have to do as well. So there's that too. And then the other option, unfortunately, is try and ride this one out. Maybe wait until the banks open up a little bit again, and you can apply for those low deposit loans.
So let me get this right. Move to Greymouth is not an option we're giving clients.
It's not somewhere I've never been.
Does not surprise me.
It doesn't.
Yeah,
I mean, been over the bridge.
You could, but quite often, and I know you're sort of joking there, but seriously, people do ask about moving towns and that sort of thing. The issue you're always going to run into there is your work has to move with you and at the same salary.
Yep.
Because if you move to Greymouth and they say, we're going to chop 10% off the top, chances are you're just in the same position in a different city. The other option is to apply for a first home loan, which is a government scheme run through Kāinga. You can use a 5% deposit. Again, I don't talk about these a lot because not a lot of people qualify for them. The income caps, $95,000 for a single, $150,000 for a couple. That's not too bad, but it really is the regional house price caps that make that almost prohibitive, right? $650K for an existing house in Auckland. Don't get me wrong, you might be able to find one, but it's not going to be great. And then $700K for a new build. Might be a little bit more likely to find a one-bedroom sort of townhouse somewhere, maybe. But those sort of house price caps make it really prohibitive for people.
I think Matt's point is very important, and one that should be touched on again, is banks are like moody girlfriends and moody boyfriends. Sometimes you just get in a little bit of trouble, you're not in the good graces, and it's a little bit harder to, I was going to say get things done, but that sounds a bit weird. The main thing is these things change all the time. This is a moment in time. If you've got the opportunity, as Mike pointed out, where you've got the pre-approval, you can actually do something, then that's fine. If you're in a bit of a holding pattern, which Mike alluded to, there will be opportunities in the future. You focus on the things within your control, whether it's paying down existing property, mortgage, saving more, and then when that time arises again, that's when you make your move.
Yep.
Cool.
Great. Okay, we're going to wrap it up there. That is deposits and new builds. Thank you for joining us. Please make sure to subscribe on YouTube, give us a review on Apple, and we'll see you next week.
Cheers.